Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon. Click on it. Select the membership. With this membership, you'll get access to all this information. Very good content. Sunday, August 15th, 2:50 p.m. New York time. What an interesting week it was for the markets, from the equities to the bonds to the currencies. We'll start off looking at the equity indexes, and we'll look at the time frame where each candle is a week. We'll look at the most important equity index, the S&P 500. It's the go-to equity index that institutions look at to compare their performance with. It's not the other ones alone. Why? Because the Nasdaq 100, the Dow Jones, and a few of the other equity indexes are inside the S&P 500 index. Got it? You know more now than many others. Good job out of you. Remember that. S&P 500, all-time new high, higher low than the prior week. The momentum's to the upside, outstanding. It's overextended. Look how small these candles have gotten. Appear to that big move up. That's impulse move. Nasdaq 100 did not make an all-time high for the week. Nope. It closed the inside candle. If you don't know what that means, join my Patreon page or go back and review my prior videos. Yep. Very interesting. That's a telling signal what may occur. Alert. Pay attention. The Dow Jones Industrial Average, all-time new high. Been a big oscillation here. Yep. The Russell 2000, not part of the S&P 500. Inside candle as well too, and it's a solid body. Did not make an all-time high. That was all the way up here. The Dow Transports, higher high, higher low, breaking above this consolidation. Here's a sector that's short on transportation drivers. Yes. Before we should be focused 100% alone on saying we need more workers at the retail store. No, we need more drivers for the transportation to get the products to the store. You can have all the salespeople in the store waiting on a product to get delivered. But if there's not enough drivers, wonder why some of your shelves are not fully stocked. The Dow Utilities, look at that. Higher high, higher low, took out a swing high up here. So let's remove that. Got it. So not everything's trending. We have several that made inside candles, several not making all-time highs, and the utility sectors, which is heavily weighted for dividends for people that are not expecting growth stocks but are looking for income, are trending up. Yeah, but the Dow did too. The Dow is also heavily weighted in stocks, not so much high tech, where Nasdaq is high tech, more growth, and it's maybe stalling. What's going on with the yields of interest rates? A lot. Let's start off with the 30-year bond. We broke below this consolidation and closed back inside it. Didn't make a lower low, lower high, but back inside it. So this trend momentum has been to the upside, and it's in a consolidation here. Here's a demand zone. this red horizontal line, and it rejected it a few times. So if we happen to pull back a little bit more, well, maybe we'll be forming a trend, and this trend may be forming a head and shoulder. Time will tell, but if this is the shoulder on the left and this is the head, when we expect this pull back. Depending if this shoulder here happens to break the low of this trend, that'd be bearish. And if that goes bearish, one would expect the yields on interest rates to go higher. So pay attention to this. This is the 30-year bond. Well, now we're looking at the 10-year treasuries notes. Similar to the 30-year. And look at that. A hammer, a bullish pin bar. Not so much here, but pretty fair down here. Go on to the faster one now. The 5-year note as well. Lower low, lower high. Close red, close near the low. Yep, struggling down here. It's mostly a big consolidation here. So let's zoom in and look at a few of these things here. '30-year, pretty well-defined trend. 10-year, much more of a consolidation phase and staircase pattern higher highs, but still momentum to the upside. Where the 5-year, yeah, much more of a consolidation. Much more of a consolidation. That's good. It's very clear what's happening on the higher time frame. In the higher time frame of the 30-year, there's more volume, more traders trade the 30-year than they do the 10-year and the 5-year. Remember, the direction of the bonds and the notes trade inverse from the yields. Yields are another name for interest rates. So we're not expecting the Federal Reserve to raise interest rates anytime soon to leave them where they're at. Let's go on to the currencies. We'll look at the US dollar index. US dollar index comprises several currencies. And the 3 largest currencies in the US dollar index, 1 is the euro, 2 is the yen, 3 is the pound. And the euro makes up almost 58% of the US dollar index. So what happened here for the week for the US dollar? Higher high, higher low, but closed back inside that prior week. So here was a swing high, failed to close above it. It's a big consolidation phase going here. Let's dissect that a little bit. Let's look at the currencies inside that. We're going to look at currencies actually trading the futures market. In the futures market, they call the currencies the FX market, where there's another currency exchange called the Forex exchange. They both are currencies, but they trade on different exchanges, call that product a different name. Most people don't know that. Why don't they know that? They choose not to work smart. Yeah, it's called homework. Understand the futures market currency has been around for a long time, but many people are not aware of the FX. So we're looking here at the euro, and currency markets in the futures all start with a /6 followed by the letter of the currency. So if this goes higher, that's in favor of the underlying currency, which is the euro. It didn't make a lower low, lower high for the week, closing back inside that prior week. Look at that. We took out that swing low, the yellow horizontal line, and closed back above it. So let's remove that swing low. If you don't know what I'm using here, this desktop trading platform is offered from TD Ameritrade, and they're not a paid sponsor. This desktop trading platform is called Thinkorswim, again, which is part of TD Ameritrade, which got bought out by Charles Schwab, and Charles Schwab trades on the stock market. Okay, so look at the euro here. Here's the high for the year. And this was the low for the year. And past week, we took out the low for the year, making a new low for the year for the euro. That's not so good. So if you're bullish over here, where we just made a new low for the year, that might be the wrong answer. Yeah, I would not look to be buying the euro yet. It hasn't given me a signal to buy it. Maybe we'll get a retracement or a bounce. But again, we also just made a new low for the euro. What is going on there? They are struggling. Japanese yen, all-time high for the year is up here. Low for the year is down here. Understand this. We just saw the dollar on that prior chart prior to the euro I showed you. There's three safe haven currencies the world likes to go to when there's issue: US dollar, Japanese yen, and the Swiss franc. So looking here again at the Japanese yen, high for the year, low for the year. We're coming off the low for the year. Consolidation, breakout to the upside, consolidation. We broke below this demand zone, closing back inside of it, that green line. So we'll see if this trend continues to the upside. There's a lot of resistance sitting up here. You have a supply zone up here, you have a midpoint up here. So on a technical, what I'm showing you here is places that may pause, may reverse, or break above. Those are all potential trade ideas right there. Yeah. But again, if the yen is going higher, what does that really mean? Sure, the yen will be getting strong against the dollar. It also means big money, institutional money, is going to a safe haven currency. Interesting. What currency are you loaded up in? British pound, symbol /6B. British pound. What's another name of the pound? Sterling? What's another name? Come on now. There's many names, nicknames. Okay, here's the high for the year. Here's the low for the year. Pretty much been a consolidation. Or okay, you want to call it trend? Yeah. This purple line is trend. And when we took out the swing low here, we had a bullish hammer, pin bar here, impulse move up, and a retracement. And look what we did here. Another, you might want to call a hammer, a pin bar. So maybe if you break above the high of here come next week or starting tonight, might be a trade signal. If you think it's bullish, might run up to this supply zone. Well, you hope it takes out this high. So again, it's struggling here. It's struggling here. Where we have the euro going weaker and the British pound struggling, but we have the Japanese yen, which is safe haven currency, showing the trend may be reversal. Okay, let's go look on here. The Canadian dollar. Yep, the Canadian dollar. Wow, came off the high. Outstanding for the year. Nice run up for the year. And then between May and June, reverse. Strong trend downside. Bullish pin bar here. In a consolidation phase. Might be building a flag pattern here. That could be a breakout to the upside up to the supply zone. Yep. We'll see what happens. Time will tell. But this is an interesting consolidation phase right here. After it had that bull pullback. I mean, that trend downward. So be cautious here because that bounce or break up to the upside might be weakness. Might be weakness for another opportunity if you're bearish to short. Something must be changing in their policy that had it such a steep sell-off here. Almost 100% retracement for the year. That's not good. Yep. And the Swiss franc. What do I call the Swiss franc? A safe haven currency. That's right. Look at that. Here's the high for the year. Here's the low for the year. It's an consolidation phase. Green area, demand zone. Green for the week. Couldn't even go inside to close inside here. So again, might be just an impulse moves it here on the faster time frames. Yep, interesting. And the Australian dollar. Wow, last year it was a rock star. This year, yep, had that impulse move up. Since then, gone lower. So look at that. A few weeks ago, it was a record low for the year. It's in a consolidation phase. It's struggling. Something really bad must happen with their policies to make their currency get weaker against the US dollar. This trending down is giving strength to the US dollar, weakening the Australian dollar. Yep, some of it might be that policy they have going on with China. So again, this consolidation opportunity, if you're bearish and it breaks out below the swing low to trade short, bearish, and maybe we'll go down to the swing low demand zone down here. Time will tell. Thank you, as always, for spending just a little bit of your time with me. Let me know what you thought about this video, and Please let me know what you want to see next. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel. By going below and clicking on my PayPal link, you can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe.